Welcome to the fifth episode of How to ThinkScript. We are TOSindicators.com, home of the volatility box. Our profits for the month of July were over $10,000 trading in a small account. Start trading with an edge, at the edge, and download the volatility box today. In today's video, we're going to build the most requested indicator of all, the V-score. So many of you have emailed us about this, so we looked into what the V-score actually is, what the value that it provides, and how we could build something similar to it and improve upon it to benefit our trading. If you'd like to skip the tutorial and start playing with the indicator right away, it's available to download for free on our website. The link is in the description box below. Otherwise, follow along in the tutorial and we'll show you how we built the V-score that we give away for free. Let's get started. Let's start by talking about what the V-score actually is. Simply put, it's a formula that calculates how far away from the mean you are in a z-score or standard deviation format. Essentially, how far away from the VWAP line are you? So if we take a look at the chart here, we have the S&P. The V-score tells us that we are currently 1.04, that's what this value is right here, standard deviations away from the mean, the white line. This also helps us take a look at the previous distances between the standard deviations and lets us now observe patterns and start to look at historical data in more of a picture format. So let's take a look from right here. So starting February, we see we're consistently over the mean. We're essentially pulling back above the mean consistently all the way until June 3rd, when we started to revert back to the mean. And the V-score essentially helps us pinpoint this reversion, capture it back to, say, the zero standard deviation, which is the mean, and then use that as a bounce to then start to time exits in terms of the first standard deviation, the second standard deviation, or even the third standard deviation. Before we dive into how we started to code this V-score, we'll show you the bells and whistles that we've added to our version compared to, I think, other versions that you might find. So the first one that should be fairly obvious is this guy right here, which is a label where the user or you can choose to plot the price at any one of these standard deviations that we've predefined. So let's say you did take this bounce and you wanted to target the one standard deviation mark as your exit. Well, you could simply select the one standard deviation, see the price ahead of time, and manage your trade, and also use, say, the negative one standard deviation. You see the price and set that in as a predefined stop and target that lets you now manage your trade a bit better. So that's bell whistle number one that we've added. The second one that you should be seeing is, or are, these clouds. And these clouds essentially visually represent the previous X number of bars and tells you what the predominant trend has been. Have we been above or below 0 on the V-score line? And now if you drill down on an intraday chart using this, we've also added in actual signals based off of what the predominant trend is and when you revert back to the mean, along with alerts. And so you'll see blue arrows are plotting up here, signaling a reversion to the mean right here. And you can play around with this. Different time frame charts have different sensitivities. So you'll see as we go to, say, the 4-hour chart, it's much more smooth. And you can now even use our first entry line to define your first area of risk where you could have caught some of these trades. Okay, with that, let's actually start diving into the code. Let's start by copying in the built-in VWAP studies code by ThinkOrSwim. And this will help us be starting block number 1. And so we'll come and copy paste this in. We'll rename this study TI VScore. And then the second one that will also come in copy is the anchored VWAP code, which is available for free on our website. And it was a previous tutorial. And so we don't need the actual plotting part, so we'll copy in this top portion, cancel, and then bring that to the V-score. We'll copy paste this in at the top. Okay, so now let's go ahead and clean this up. So we don't need anchored time in here, so we can delete that. We can also delete post anchored time as a result. We don't actually need the anchored VWAP, so we can delete that. We won't need this number, the input code from ThinkOrSwim. We won't need any of that. We won't need this either, and we won't need any of that code. Okay, so now where we should be is you should have the input anchor date from the anchor VWAP study, along with our post-anchor date, which helps us figure out if we're before or after the date. Then we should have the def of today's date, which is YYYMMDD, captured, and you should see period index. The first change that we'll go ahead and make is delete the period index and redefine it ourselves, in which we'll make the period that it actually looks, where if our aggregation period, so if the chart is less than an hour, so an hourly chart, then we'll use today's VWAP, so the today's date as the VWAP. Otherwise, we'll use the anchor VWAP, that date as the anchor for which we should measure this entire V-score. After that, we'll leave all of this code and come down here to where we've actually plotted the VWAP and the upper and lower bands. We can go ahead and delete all of this code along with their subsequent plots. Okay, so now you should be left where the one error we see is that there's no plot actually defined. And in this plot, we'll start by defining the V-score. We're going to copy and paste this code in. It's available on our website as a snippet, so you can follow along there. And so we'll copy paste this in first, and then we'll explain what the code actually is. Okay, so what you should see right here is we have a comparison. So price is from the VWAP study, the built-in VWAP study, and we compare that to where the close of whatever candle, the latest candle is, and we essentially measure what kind of a standard deviation or z-score does that have. And one catch that we've added in is if we're greater than or less than 5 or -5 standard deviations, then let's reset the v-score back to 0 since something crazy is actually happening, and otherwise plot what the actual standard deviation is. And so that's the actual v-score that we've plotted. Now let's go ahead and plot each of the first, second, and third standard deviation lines along with the 0 line. The way we do that is simple. We just say plot 0 and we'll assign a variable. And we'll go ahead and do this for each one of our standard deviations. So we have 2, and then we'll go -1, which will be -1, plot -2, which will be -2, and then plot -3, which will be -3. We'll also go ahead and add in 2 other lines, and we'll call these lines sort of our close to 0 lines, and we'll give them a 0.3 value just so that you have an idea of when the v-score is starting to enter into, say, areas that you would normally consider relatively close to the mean. And so we'll call this the positive integer, and we'll give this 0.3 value, and then we'll do the same thing on the negative side, and we'll give this a -0.3 value. Okay, so with this, we now also have the ability to create a stop price, which is going to feed into that variable, if you remember this white variable plot right here. And so to go ahead and do that, we need to first create an actual input where the user can select which one of the standard deviations they'd like to see plotted. And so we'll go ahead and add that in as input dev stop. And so we'll say deviation stop here, and we'll give this the labels 1, 2, 3, 0, -1, -2, and -3. And we'll close the curly braces. And now we'll actually go ahead and define what each one of these are. So we'll create a variable chosen deviation, and we'll say switch between dev stop. And we'll make each one of the above variables a case of its own. And so the way we do that is by saying case 1, and in this case, the chosen deviation is 1. Case 2, chosen deviation 2, and we'll just copy paste this in for the rest. So we'll make this 3 and 3, and we'll make this 0, and change this to 0. And now we have -1, -2, and -3 that we need to still do. So we'll say -1, -2, and -3. And so we also need to change each one of these variables. So we'll say -1 there, add a negative sign in front of this 2, and change this to be -3. And that should now encompass all of our cases. And if once we close this, essentially let the user select which one of these standard deviations they'd like to choose, and then now we have that variable saved as a chosen dev. So if we come back down to here, we can now add in a stop price, which we'll say is defined as def stop price, and we'll use the chosen deviation, and we'll multiply that by the actual deviation, which is a value from the built-in VWAP code. And then to that, we'll add the actual price, and that should save. So now if we go ahead and add in the actual label, so we'll say yes, and then we want this to be price at, and then we'll start the brackets for the standard deviations, and we'll say chosen dev, which is our variable from up above, which the user selected. We'll close that, and then close this bracket in the text, and we'll say standard deviation, and then start the quotes plus as price, and then we'll round the stop price to 2 decimal points, and then close this out with the color.white. Hopefully that should accept with no errors. Let's see. Oh, we forgot a plus sign right here. Okay, perfect. And so now we'd like to make this variable let the user decide if they'd like to see this variable or not. And so we'll just change this to input show stop label, and we'll make it a yes by default, but you could always change that, and we'll just say show stop label. And so now the user can select whether or not they'd like to see this label plotted. Okay, so now let's keep going. The next bell and whistle that we'll add is we'll start to clump the V-score into both a 0 to into each one of these categories. So 0 and 1, 1 and 2, 2 and 3, and then the same way we'll go the other side. We'll say -0 and -1, or if it's between -1 and -2, or if it's between -2 and -3, we'll give it a variable or essentially a score, a counter variable, and then that now lets us go ahead and access the previous bars to understand what has the trend been like. Have we been above or below the 0 line, or in which one of these quadrants have we been? And now we can start to plot some of these clouds there. So let's start by defining the first 0, and if it's between 0 and 1, we'll say if V-score is greater than 0, and it's also less than or equal to 1, then we'll give it a score of 1, otherwise we'll say 0. Okay, perfect. So that accepted without any errors. We'll change this S just because that's bothering me. Okay, perfect. And so now we can copy paste this in 2 more times and change the 0 and 1 to say 1 and 2, and then we can change this to say 2 and 3. And then here we'd like to see if the standard deviation is greater than or equal to 1, and here it will be 2, and here same thing, will be 2, and then 3 here. Okay, so now, oh, did we never create a 3? Nice catch. Okay, so we'll create a 3, oops, plot 3. All right, perfect. And now we'll go ahead and copy paste this in, and we'll do the same thing for the negative side. And so here we can just add a negative at the beginning and capitalize each one of these. It's -1, and then we'll make this -2 and 3. And then here we'd like to see if the V-score is greater than or equal to -1, and then if it's less than or equal to 0. Actually, we'll take out the equal to 2 with the 0, and here we'll change this to -2, and here we'll change this to -1, and here we'll change this to -3, and here we'll add this to be -2. And if you should see, this is just a pattern going down: 0, -1, -2, essentially letting us capture which quadrant we're actually in. Okay, so we've made pretty good progress so far, but we have a little bit more to go. Now we need to start by defining each of these clouds, or essentially we need to define the 2 clouds that we'll have, the positive and the negative cloud, and we need to essentially create a test that lets us go through each one of these clouds. To save time, we're going to copy and paste this code in, but we will cover what the code actually means. The code is available for you to copy and paste on the website if you are following along. Okay, so here we come in and we copy and paste this code as the cloud. And you should see there's quite a few errors that have come up. And the reason those errors are coming up is because it's looking for a variable called bars go back, which it hasn't found. And so let's go ahead and add that in. Okay, so if we come in at the top, we'll say input bars go back. And this is the part where you can decide, hey, I'd like to go back 120 bars, I'd like to go back 30 bars, whatever you'd like based off of your chart. Right? So if we now add in 120, you see the errors have all gone. Now let's actually go through what this code actually is that we copy pasted in. So now what we've actually done is we've said, okay, if the sum of the amount of times that were between 0 and 1 over the past, let's say 120 bars in this case, is greater than the sum of the amount of times that were between 1 and 2, and 2 and 3, and between all of the other quadrants of 0 and 1, negative 0 and 1, negative 0 and 2, so on and so forth, then go ahead and essentially say that the cloud should be between 0 and 1, which is the winning cloud, if you will. And we go ahead and do this for all of the quadrants. And so that, if you want to pause or go through the code on yourself, you'll see that the first code that's there is a winning quadrant, and then everything after that is the condition to make sure that it is a quadrant that wins over any one of the other clouds that it could be. And at the end of this code, we actually plot these clouds. And so the way you do that is the cloud always takes in two variables, so cloud 1 and cloud 2. And then we add in the color light red and light green. So if we hit OK here, what we should see, if we plot this, oops, we'll need to go ahead and make sure to declare it to be lower, but it should start to look something like the V-score that we see over here. Okay, nice, but we clearly need to clean this up some more. So let's go right back to it. Scroll all the way down. Okay, so now let's keep going. We'd like to be able to take these clouds or these values that we just pasted in and actually take out some sort of relevant signal, right? Something that's systematic, process-driven, and is at least driven by ThinkOrSwim, and then you can adjust the sensitivities based off of your preference, but you know it's being done by a computer, so it's systematic and it's being done the same way every single time, which is key to process-driven trading. So now we'll add in an actual bullish signal just so that we know that systematically every time this is how we'd like to calculate it. So we'll say plot bull signal, and here we'll say if cloud 1 is equal to 1, or if cloud 2 is equal to 1, or cloud 1 is equal to 2, or cloud 2 is equal to 2, and then we'll go through with the most positive one as well, which is or cloud 1 is equal to 3, or cloud 2 is equal to 3, and the V-score, the V-score is less than or equal to 0, and the previous V-score was greater than or equal to 0, essentially telling us that we were above it, and now we're reverting back to the mean or into mean territory. And let's say that you'd like to tweak the signal to say be between 0.3 and 0, then you can go ahead and change the first less than or equal to 0 to be 0.3, but we'll use it as a 0 for right now. And let's use the CCI as a confirmation, which we've done in some of our previous videos. So we'll just say that we want it to be greater than negative 100, which essentially tells us that, okay, there's definitely not a ton of selling pressure that's coming in, so you're relatively in some sort of a safe area. Then we'll give this the value negative 2. So essentially we'd like it to plot on the low. So we'll say we want it to plot as a positive arrow on the negative 2. So we'll give it a value of negative 2. And otherwise, we'll say do nothing. Now we'll go ahead and do the same thing for the bear signal. And so if we copy and paste this entire code in, and now we'll come in and we'll add a negative in front of each one of these. So we'll say negative 1, or -1, -2, or -2, -3. Actually, we should have fixed these. We'll just go ahead and fix this just to have the syntax look relatively clean. -2, and then the last one. Okay, cool. So now we can keep going. So -3. And here we'll say if the v-score is greater than or equal to 0, and let's actually change this to 0.3 in both of these cases, just so we can give it some sort of room. And then here we'll give this, once again, is less than or equal to 0, and the CCI is less than 100, which tells us that there's not a lot of buying pressure going on. Then we'll plot this as a +2 this time, since we'll have the arrow pointing down, else double nan. And then now let's go ahead and actually just set these painting strategies. So these are defined. And then for the lines, we'll just set those using the user panel. And so we'll say set painting strategy here, painting strategy, and we'll give this arrow up. And then we'll copy paste this in, change this to be bear signal, and we'll make the bear signal be arrow down. And then we can assign a weight to each one of these just so that they're a little bit thicker than the usual weight. So we'll say set line weight, and we'll set them to be 3. And same thing with the bear signal, set line weight, and we'll make this 3. Okay, perfect. Now let's go ahead and click OK and see what this looks like. And before we actually, okay, so you see it still looks a little bit hideous when we plot it. So let's go ahead and apply the same settings that the chart above, which is our default one, has. So we'll come in, we'll change the v-score to actually be a weight of 5. We'll make it the heaviest one, and we'll give it the yellow color. We'll make the 0 line a slightly thicker weight of 4, and we'll give it the white color. And then 1 we'll make a light gray, and we'll give it a weight of 2. And then we can make 2 shade of green, and we can say make this a weight of 3 as well. And actually, we could give this a slightly different green, and then give 3 the greenest of greens, and we'll give this also a weight of 3. And then same color sort of combination on the other side, so -2. So on the -1 side, we'll do 2. And this will just be, I think on one we had a gray, so we'll make this also a gray. Is that the same gray? There we go. Okay, so -2 will now be a slightly deeper line weight, and we'll give this red, and then we'll give this the deepest of the reds, and we'll make this a weight of 3. And then for the positive integer, let's go ahead and make this a line, but we'll make this a dashed line, and we'll make each of them just a weight of 1, but with the dashed line. Okay, perfect. And then the bull signal we'd like to make numerical, and that's all fine, and that's all fine. So now if we hit apply, okay, cool. So that looks a little bit better. I don't like how heavy some of these lines are, so let's just reduce the final ones from 3 to be, let's say, 2, 2, and then we can make this a 1, and we can even make this guy a 1, and then we'll make this a 2, or sorry, a 1, a 2, a 1. And hopefully that looks a little cleaner. Okay, perfect. So that's starting to look very similar. I think the second dash line needs to be changed to be the slightly smaller dashes. Okay, perfect. And so now what we can go ahead and do is with these settings, we can come up here and we can do save. We can click Save as Default. Okay, so if you notice, these two lines don't really look the same, and these v-scores are different because they're anchored to different dates. And this is sort of the relevance and the importance of choosing a date that's far back enough that gives you an idea of what the true mean looks like over the course of an entire year, as opposed to, in this case, say a more near-term mean, which if you see is really jaggedy and doesn't really give you too much information. So let's come back into the code and let's change this to now say 2018, so it goes back, and we'll change it to August to be the 1st of August. One more thing that we'll add into this code is we'll declare it to be lower, so it knows to always plot as a lower study. With that, we'll click Apply and OK. Now, as you see, the z-scores are the exact same, so let's just get rid of 1. And let's actually take a look at the z-score. Let's cycle through a few different charts. So let's start with Apple. And now, if we actually look at Apple using some of the bells and whistles that we added in, we see that our z-score started giving us signals to go long here. This is where we actually cross the the zero mean, where we essentially pulled back to the mean in terms of volume weighted average price. And we see that that is very close to this pivotal point, after which point we started to go up. And now we also gave our bull signal, and we've made the 0.3, but if we changed it to 0, you would have seen only a handful of signals. And that essentially tells us when you could go long. What you also see is the background clearly shows up as green, telling you that, hey, for the most time, we are more bullish than bearish. However, if we now just scroll back a little, you'll see that in this period, we could very clearly see that the V-score was bearish because we actually see the clouds being plotted under the 0 line. Like this, let's just go through a couple more charts. I think this video has gone on way too long, and so we'll just do a few more charts, and then I'll let you play with the indicator and add the alerts in yourself. So if we take a look at Home Depot, once again, a very similar story, but what you'll see in Home Depot is our z-score. We've seen the 0.3 line that we added in act more as a support than the actual 0 line, and anytime we've gotten close is where we've started to reverse. Things like this are patterns to look out for and be aware of, and use them to essentially make your decision as to whether or not we've pulled back enough in terms of a volume weighted average price to mandate whatever strategy you might have. You could also boil this down on a lower time frame chart, but what you'll start to notice is the lines become a little bit more jagged, and this is because if you remember that condition we added in, anything less than 1 hour on the aggregation period, we'll use the daily VWAP, which is much more jagged as opposed to, say, something like the anchored VWAP, where we now go back on a daily view, and you can see some very, very clean signals as to when to go long, and that helps you capture great moves like this in Home Depot. I hope this tutorial helped. As always, the code is available for free download on our website. We urge you to check it out, play with this code, let us know if you find anything interesting. Maybe in future videos we'll talk about how to build scans for the V-score, but if there's anything else that you're interested in seeing, please feel free to comment below or email us at contact@tosindicators.com, and we'll take a look. Once again, thank you for watching this tutorial video, and we look forward to seeing you next time.